Afternoon all. How are we doing? How is everybody? Afternoon, everybody. God, it's a long list today. How many got in here? Monkey, JC, Ian, Burke, Kennelly, Crom, Fletch. Afternoon. It's time. Baggy, Nicholas, Peter, Virginia, Brian, Nicholas again. You said hello twice. That's cheating. How are we all doing? Big moves today. Big moves. Wasn't expecting that. So yeah, a few ADRs to go through today. A lot more movement than I thought we were going to get, considering it's very weak news day today and tomorrow, really. So big moves, which is good. Everything's going in the right direction. Well, for me anyway. Yeah, banked 1.59% today, mainly pound yen. Euro New Zealand, just while I'm looking at this, this is the entry that I took last week on Tuesday. Where are we? Friday, Thursday. Tuesday. So we pushed down, got an RSI extension. Did I change the RSI? Yes. No, I had. We were talking about RSIs this morning, weren't we? I changed it to a close. I was like, hang on a minute, that hasn't hit. Now it has. So there you go. Difference between a close and a median on the RSI. You wouldn't have got that if you were using the close. So yeah, long from there. We had a little bit of a push down, rallied up, pulled back, pushed up. I'm just about to stop on that. My TP was there. It pushed up, missed my TP by basically 2 pips. So I've just put a trailing stop on it, which is just about to get stopped out. So my TP was there. I'm not going to take that. Obviously, there's a danger, obviously, of it coming back down again. So I'm out. So I'm just about to stop out on that one. Maybe I won't. There's no TP on it now. So if it wants to rally like hell for the afternoon, fine. But yeah, not going to take that one. Pound yen closed out this morning a little bit. That's now at back at break even. So that was an entry that I took there, which was an aggressive drawdown control position because there's 5 trades on this. So I took that one off there. Reason for that exit was because it was support. There. Sorry, no, there. So that was where I was potentially looking for a bounce. So I had an entry there, an exit there. This is the second potential exit, which is currently the break even, but we are 150 ADR. So I think I'm going to get out of pound yen and just go flat on it. It could well push, but these yens have been so squeezy. I just think it's time to pull back on them a little bit. So it's still New Zealand dollar yen 125. It's still 0.32% because of swaps in the hole. So what I'm going to do is I'm going to put a trailer on this one. How big should my trailer be? Make it small, 140. So I'm going to put a 14 pip trailer on that. 14 pip trailer on that. And pull the stops up on these two as well into those positions. And just get out of this pound yen. So I will take a little bit of a loss if it pulls back from here. I think it probably will. Oh, there's another one. I'll manually trail those. So, yeah, I just want out of that pound yen just to reduce the exposure on it. I've still got Swiss yen on short. That CAD yen's just hit. Yen's pushing really hard. I've still got the Swiss yen on, which is in profit now as well. So I think that's going to be me done on this on these yens. I'll hold one. I don't really want to hold any. I think there's potentially still room, but you know, it's money at the end of the day. I like it. I want it. So I'm taking it. Afternoon, Antonius. Yen pumping nicely. Yeah. So it's good moves on this. As I say, we are pushing hard at the moment. Or should I just shut some of this out? I don't know whether to shut some of this out and add them back on a retracement. Really tricky this yen at the minute, especially the pound. The pound and the Swiss yen are the two that I'm struggling with because they are bullish. I'm really worried just about support bounces on these and it coming back up into there. I just don't want to be exposed on it anymore. It's been squeezed. There's a good chance it will continue to push down, but it's not worth the risk. They've been profitable, so I'm going to get out. Yeah, that's the current situation. Load of ADRs to look at. We've got a couple of RSIs, not a lot, but I just wanted to cover the DAX and oil. So oil, we're completely sideways on. We've had quite a bit of volatility come through on oil this morning, but no movement. Oops, wrong one. So we are basically on oil off of that support, that resistance area there, with the second target being at ADR today. So I think there's a chance we might pull back from this. And then obviously it's whether or not they're going to rally. But this is a really good double top. I was waiting to see if we tried to run on that this morning. We haven't. So there is a potential short opportunity on it if you fancy it from that double top. So that's a really good bounce we've had from that monthly level. And you've got a backup coming up as well, up at ADR there. This one, which is that level there. So you could take an entry here and go for that run, and then a second entry if we do get a rally and an ADR hit, because I reckon we'll probably get a bounce off of that if we don't get it from where we are here. So there is a potential short on oil available. The DAX, this morning I couldn't get any money out of the DAX, made a loss on the DAX this morning. Open was just a chop fest. So the pre-market went long, came back down, then it rallied short. We got that double bottom bounce off of the pre-market open. That was the trade. I tried to short it today, got stopped out on both my shorts. I had another go at a short there because I thought that was going to be a double top and it was going to pull back from there. Bias just kept on buying it. So we have come off of ADR on the DAX. That's the gap fill we're looking for. So potentially this is a double top on yesterday's high, Friday's high, and we could push back down this afternoon. Don't know where the DAX is going. So we'll be trading the US indices this afternoon. Let's quickly whiz over to those. So we'll see how these go with the opening range breaks today. We've got quite a lot of volatility coming in ahead of the open. So the pre-market ranges are fairly decent today. See what happens. Nathan, in your, there you go. So there's your opens in. Frozen. There we go. Okay, long on the NASDAQ. Okay, Dow, long. We're up at the highs on Dow. Oh, God, that's the NASDAQ. Whoops. Sorry, I'm trading the wrong thing. Close that out. 1 sec. Sorry. I'm trying to concentrate on two things at once. That's not bad. I just made $350 on the NASDAQ by accident. Anyway, so the Dow's just gone long. I was just going to say we're just coming up into resistance, but it wasn't resistance. It was resistance on the NASDAQ. So we're long on the NASDAQ. We're long on the Dow. We are long on the S&P on the opening range pre-markets. But we are coming up into resistance now on the Dow here. Just watch this level for rejection. DAX is having a little bit of a rally as well. Cool, they're buying this up, aren't they, today? So upside targets today. I'll have a look at your comments in a minute, sorry. What's going on? Dow, we've got no gap fills anywhere. So upside targets, just watch that high. Okay, we've broken the... No, we're rejecting the high. This is the Globex high. This is the pre-market high, basically, today. So there's no upside targets, no gaps anywhere. We've got a little bit of a gap here on the Dow. but it's kind of within a move. So whether that's valid or not, that's pretty much the same one as we had on the DAX. So upside targets today, you've got to say really ADR 150, which is yesterday's high or Friday's high. Should have held that. Is your upside target. There's no real targets other than that to the upside. Downside targets, we're looking at basically Globex lows from today. So this looks like obviously though it's gone long, which it has. So there's your opening range breakout pre-market. Huge profits today if you've taken the pre-markets. Nice easy money there. So if you wanted to close out now, 2.5%, depending on what your risk is. Oh my God, I completely missed this trade on Dow this morning on the pre-market, which I was just trying to take on the futures market. And I accidentally traded the NASDAQ, which is actually too much risk. So I've just closed that NASDAQ for $300 profit. If I'd let it run, I'd probably be sitting in somewhere around 2K now. Typical. Yeah, I just missed that. I didn't get the entry on the Dow because I was accidentally trading the wrong instrument. Trying to do too many things at once. I'm a man. I can't multitask. So watch these upsides. If these reject basically this 5-minute open and we don't go for the run today, the only way we've got to go to the downside is to retest today's Globex lows on all of these markets. So upside targets are pretty much unlimited because we're in the middle of a pullback. Basically, yeah. So upside targets could be absolutely anywhere. If we're going to continue to go down, we obviously double bottomed today. So if this is going to be the form of a range, obviously your targets are just anywhere to the upside. So there's no real upside limit apart from yesterday's high that you would say, right, this is potentially a bounce point. So sky's the limit today. As we saw, we've had some very big days put in on these indices. Last Thursday, obviously, was a massive, massive move. We had 500 points on the Dow off of a 270 ADR. So pretty much 200 ADR move across the board on Thursday. Could undo the entire lot today, so we'll see where we go. If you're going to take the 5-minute opening ranges today, I would be careful because that's far too big to trade with a stop loss at the opposite end. So ORBs today, probably not the best idea. So that's your opening range. You want to go long on this, wait for a pullback. Somewhere around about the 50% mark, and then maybe take a long with a break under the low, stop under the low. That ORB is too big. Right. There we go. Big ORBs. Pre-market anyway. In your experience, after a squeeze, does it increase, decrease, no effect that it will squeeze again in the near future? No, it doesn't make any difference. Squeezes happen because of fundamental news. So the reason you get a big, strong market move like we've had on a few of these yens is basically because the market has a reason to squeeze. The yen's a little bit of an anomaly because obviously with the yen, with the interest rates being negative, it's usually weak. Most of the time, everything that has positive news will be able to push against the yen. So the Japanese do not change their interest rates. We're negative 0.1. We've been negative 0.1 for 6 years, more than 6 years. So it's a little bit disaffected by inflationary change and things like that. But with the rest of them, you tend to find the squeezes occur off of a fundamental shift. So an unexpected inflation, interest rate, or usually unemployment figure. Those are the three things which tend to cause it. When you've had those, that squeeze has happened, the market is then repositioned for it. So you don't tend to get a squeeze happening after a squeeze, unless it gets it wrong again. Basically, what a squeeze is when the market's got it wrong. So, for example, interest rates. We are forecasting 5 on the Canadian dollar. Yeah. So on Thursday, we're going to get the Canadian interest rates, which are going to come out. We're forecasting 5. It's 4.75 at the moment. So the market will have factored in that 5% interest rate. What will happen when you get that 5% interest rate is typically the market will just continue to do what it was doing. And if it includes normal market structure, that's exactly what it will continue to do. If you get an unexpected news event, the market will shift fast and hard in one direction and then often accumulate and push. And that could be obviously in either way. Yeah. And that reason we don't get that pullback there is what causes the squeeze. So it's the market basically repositioning itself because it was expecting by a particular point in time for price to be at a certain level. It hadn't achieved it, and the outlook moving forward was better or worse than expected. Therefore, you need to put more money into that currency or withdraw more money out of that currency, which starts a multi-week move, basically, to either power up or reduce power in any one particular currency. That's basically why they occur. The market doesn't often get it wrong, which is why position trading works so well, because as long as the market kind of knows what it's doing, you're going to get market structure, swings. As long as there's swings, we've always got a way to get in and out of the market. It's when you get these multiple week pushes, like with the Aussie New Zealand, that's when it catches us off guard. This was caused by the New Zealand dollar interest rate coming out as expected. The market had an unexpected reaction to it and then got hit by the Australian dollar having an expected result, which it then rallied on. So you got two movements in the same direction. This one wasn't expected, that one was. That's why you got that twice as far move as normal, and the snapback is twice as hard. So when you do get a squeeze, the snapback's as quick, which gives us the exit. But you usually find the market, once it's readjusted, it won't get it wrong again. But this is the market, it can do what it likes, but typically no. Unless there's an overcorrection in the other direction, obviously, which is where you tend to see the A-shaped and V-shaped recoveries forming. That me disconnecting, or was that the MT4s? The MT4s, that's good. Yeah. Afternoon, Amy. Love this channel. Happy Monday. Happy Monday, fun day. Yeah, it is fun today. Wasn't expecting to be quite so much fun, but anyway. Afternoon, Stevie. XRupdate.news. Fell asleep, missed my reversal. That's not good. I wasn't focusing this morning. I missed the pullback on the DAX. I was ready to get in on an ADR hit on the DAX and I missed it. And it was a beauty as well on the DAX this morning. Look at that. Straight off ADR. Missed it. Never mind. Right. Speaking of ADRs, let's have a look at some of these. Let's just quickly see what this is doing. So the Dow has just paused and formed an inside bar. So if you want to take the Dow and you missed it, entry now will be a break of that high or that low. So we formed a propulsion gap. So the market will now potentially retest that propulsion gap and run, or it will just run and leave that propulsion gap intact, and then we'll come back and sort that out a bit later. So you've got an inside bar break opportunity there. Obviously, this could just be a fake move at the open, and obviously they're going to go with a continuation short from Friday. See, but either way, you've got an inside bar break, so there's an opportunity to get in on that. That's so close to TPing that. $33.8. That's that one. S&P is rallying. NASDAQ's trying to pull back. So I will look at the ADRs. Just want to just watch this because this is looking like it's stalling out up at the highs here. Struggling. Just going to shut one of those DOWs off. Cover that one. We're approaching ADR as well. So obviously this market is very stretched. And closing an S&P and covering that as well. NASDAQ's already back down at break even. So those two are locked in profit. I'll let the NASDAQ run. See where that goes. We've got 1.5 minutes left on the Dow. The Dow's painting a 2 inside bar pattern. So obviously there's your open. There's your second 5 minute. Your third 5 minute is inside your second 5 minute. So the first 15 minutes, we've got an inside bar, which means basically we are contracting, waiting for a break, which will either be to the long or the short. I mean, this Dow now is either going to break, I think, hard in one direction or the other. You've got less than a minute left. See if we break to the downside or we paint an inside bar. Paint an inside bar here. Really simple trade. Stop under there. Stop above the high. Limit orders, rather. Yeah, just take whichever way it breaks next. Go with the flow. So, bought that. We've sold that. No one's in charge. Someone's going to take charge in a minute. That's the way you want to go. Okay, 10 seconds. Okay, so that's not technically a 2 inside bar, but as close as you're going to get. So wait for the break. Right, ADRs. So there's loads of ADRs. Aussie dollar CAD. So just had the reverse alert on the Aussie dollar CAD. Literally just taken it. Look, V-shaped recovery. There. I'm already long on this one. But that's down to 125 ADR. So 15-minute reversal alert and 5-minute reversal alert. We looked at this one this morning as a potential bounce off of here, which we kind of got, but it then pushed back down again. So we were looking at these levels for potential support. We haven't quite got to those. So we're kind of turning mid support levels at the minute from here, but that looks like a good looking potential long. Obviously, the Australian dollar is weak at the moment. Pound Yen 175 ADR, but you've stopped me out, haven't you? Yeah. Oh, well. So stopped out and flat on the pound yen. Swiss yen still going. So, yeah, Aussie dollar CAD. The Aussie dollar is weak at the moment, as we know. Long on the Dow. Let's break the upside. Here that goes. So yeah, Aussie dollar CAD, basically, the Aussie dollar is weak. Canadian dollar, we're not going to find out what's going to happen to that until Wednesday afternoon when the Canadian rate comes out. So I was kind of expecting this market to be a little flat today, which isn't being the case because I thought we would be waiting for some proper movement to happen when this news kicks in on Wednesday, but it looks like we're positioning ourselves ahead of the news this week. So there's a fair bit of movement and obviously potential for undoing all of this movement on Wednesday. So we're just pulling back to the downside on the NASDAQ. That's going to stop out break even. Dow still trying to rally long. Aussie dollar Swiss. Big hit to the downside. Again, Aussie dollar. A lot of these are Aussie dollar weakness. So that's hit to the downside. Your 5-minute reversal alert. I've had one. It's not painted properly for some reason. There we go. So that was your reversal alert on that one. All we've done is we've pulled back and we've retested. So there's your W pattern formation going in at the moment. But this Aussie is still very, very weak. Aussie dollar yen. Obviously, as I said this morning, if you were here, probably not a good idea to try and mean revert these yens. They are incredibly strong at the moment, and there is potential for them to carry on going. So, you know, we're talking about squeezes. The further that stretch gets, the further the elastic band stretches, the faster and the harder it tends to snap back. So there's a good chance that we might well just come and retrace pretty much all of this movement with these yens. So still going. If you're long on the Dow, that's just broken and has now hit ADR. So we are up at ADR. So just be careful of this one because we're extended. It's horrible when you get these massive 5-minute opening ranges in because so much movement has been done in that range. The ADR on this is 27. We've done 14. So half an ADR, basically, over half an ADR in that 5-minute open. So, you know, there's a lot of exhaustion gone into that move today. It's very difficult for the market to find money to move the market. So we might find that we just get a little bit of exhaustion up here, but it's actually running at the moment, isn't it? A lot of power today. Unexpected. Aussie US, that's hit to the downside. Lovely bounce on that one. M5 reversal alert was there. Yeah, so nice tight reversal alert. That one's flying at the moment. Weak US dollar. We've got the CAD yen. So again, all these yens, be careful. And the Swiss yen still rallying this yen. So I wouldn't want to get in the front of this. Euro yen, same thing, coming down very, very hard. Not stopping. Yeah, that's the whole point of the reversal alert indicator is to tell you when you've got the buyers on side if you're going long and the sellers on side if you're going short. That was the last batch of buyers we had. So the support rectangle is always drawn on the last batch of buy orders. Until we break back above that level, the buyers are not fully in control. That's the last time they tried a rally. They failed. So wait for the structure to break. Things really moving today. Oh. So bear with me a sec. Euro yen. Let me just cover these euros quickly. Euro odd, so I know where I am. Euro odd, ADR hit to the upside. M-pound reversal at ADR. There's your reversal alert. You would have had a reversal alert in there as well, which would have been on that candle there. That was your first one. Then it came up and or did that invalidate? I'm not sure that did. Double topped. That's why, yeah. So basically that was your entry. Your second entry is there. So it's basically the same entry. So there's your entry on that one, and euro pound as well is the other one which is extended to the upside. There's your reversal alert, entry short. That's also come off monthly high. Look at that. Perfect. Monthly high resistance bounce. Sorry, that's not a monthly high. That is 2 months ago's low. So that's a previous old low. Not a very good level, that. So that's that low there, basically. So not particularly good support resistance level, that one, because it's the low was formed as the market was dropping. Right at the end of the month, we were still dropping. So the low obviously has just got invalidated and pushed down. So it's not a particularly good level, that. But it is a good potential support resistance area there. It is an area the market has reacted at quite a lot, though, look. Fairly strong. So nice little bounce there on the euro pound. Dow's just pulled back straight into the opening range, the opening cash balance high. And they're buying it back up again. Very strong, this market today. Can't believe there's so much movement. It's nice. So, stopped out on the NASDAQ longs, flipped short on the way to TP. Propulsion gap being tested at the moment. Then we've got the Globex lows to the downside. God, this thing's absolutely flying. So we've got complete divergence here. We've got the Dow rallying like crazy. We've got the NASDAQ dropping like crazy. The S&P has no idea. Pick a direction. Market's got no idea today. Right. Euro yen, pound yen, again, same thing. Don't get in the way of this at the moment. You can take it if you want to as a mean reversion, but ADR reversals when you got something moving this fast and this hard. This is now day 4 of the yen push. Yeah, so we started here. Yeah, this is day 4. ADR, 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 ADR. Basically, we're just putting in solid ADR moves across the board on these yen pairs on pretty much every instrument. So you don't really want to be getting in front of this at the moment. Really going very, very hard at the minute. That Swiss yen I might close out. Do I want to go flat on the yen? Just trying to see when the next Euro news is. Nothing coming up. PMIs in a couple of weeks. So I'm just a little bit worried about the Swiss franc. I think is going to rally with the euro, but it's probably going to wait until we get some news coming through. So just don't know whether to hold on to this or let it go. See what I'm going to do. Never got 1, 2, 3, 4, 5. I'm going to do some drawdown control. So I'm going to take off the top position because we are 125 ADR. Which was 1200. So I'm going to close out that 495 on the Swiss yen, which is that one down there. Okay, so just doing some drawdown control basically. So closed out that short and taken that lowest position off. So as you can see, it leaves my average pretty much where it was before. Well, it leaves my targets on this, which is that high, pretty much intact, so that if we push down to 175 ADR today, I'll be able to close it all out in profit. But if it does push against and we get a push back up, there's the last position. So I can add that position I've just taken off back on again. And then if we go into a range, I can get out the whole thing again. So take the profit twice, basically. But if it continues to push, I'll just get out exactly where I am. Okay, so Dow's just hit a 50% retracement level. Actually, a bit more than that on that move. So if that is going to be a retracement and push down, this is where we might find we start getting some sell orders coming in, but certainly rallying like crazy at the moment. So leave it as it is. Pound yen, pound US dollar. That's just come off of ADR, straight off of ADR to the downside. So we had a big drop down, hit ADR. Reverse alert's just gone in. Again, V-shape recovery there on that part of the move, but very far away, that one. So nice ADR bounce there. But at the moment, we should be looking for longs on the pound. So this is a really nice entry. But obviously, we've got US dollar CPI news coming up on Wednesday. We've got no other real pound news coming up that's of any real impact. So there's a good chance that we might get some strength off the US dollar if the CPI figures are positive, which means that will continue to the downside. But for right now, it's a nice ADR reversal. New Zealand dollar yen, again, same thing. Wouldn't want to get in front of that. Same with the US dollar yen. So there you go. Lots of ADRs, but the yen ones, just be careful if you're going to try and long these, because you are literally longing a freight train at the moment. RSIs. So stopped out on the second half of the S&P. Oh, come on, NASDAQ. So NASDAQ missed TP by that much. Typical. I'm just watching the S&P. Look at these wicks on the S&P. All wicks to the downside, meaning that there's a lot of buy pressure. The sellers are trying to knock this back down again. They're buying this propulsion gap over and over and over again. Can't get down. If the S&P is going to fly because they're buying it, the NASDAQ will probably go with it at some point. So this is probably not a bad spot to shut the NAS out. I've lost 1,000 on the long, and I've got like $1,300 on the short. So I'll take that off. That basically cancels that out and puts that into profit. Then I've got the S&P running with 1.3%. Sorry, the Dow running. So chances of that getting to 150 ADR, I'm going to move that down slightly, just under 150 ADR, because 150 ADR today is Friday's high. So if we're going to get a double top, I want to make sure I'm out just before that double top comes in. So there's your upside target today, 150 ADR, if you're going to hold the Dow. Let's see. Right. Let me just catch up on the chat. Beauty short on the NASDAQ. Yep. Well, here's if you didn't take the long. Aussie dollar CAD. I think we've covered that one, haven't we? That's an ADR. Yeah, done that already. Apakah ini emas. I'm from Indonesia. I have no idea what that meant, what I've just said. Hello. S&P to 44.50. Yeah, New Zealand dollar yen. So we've got a couple of more RSIs just lit up. Yeah, not today though. 44.50s, Friday's high. So not going to hit that today. It's 175 ADR. Well, I say you're not going to hit it today. Didn't expect to do 220 ADR on Thursday, but we did. So anything's possible, but that's a pretty big stretch to get 175 ADR. I don't think we'll get there today. We are going long though at the moment, so it's obvious. Obviously, the buyers are in charge today. Yeah, these wicks to the downside. Sellers are getting their asses handed to them at the moment. As soon as we break that high, it's going to pop. Ready? There we go. Ooh, not quite. There we go. There's your pop. So that was all the stop orders from the short orders triggering, which is why you see that big pop that lays out the top. That's all the shorts triggering. So they'll probably pull back from that now. Add and run. So yeah, upside target is impossible to call today. That is the ultimate upside target, but it could be absolutely anywhere in that drop. There's no support resistance levels in that drop. You can pick and go, yeah, that's where it's going to happen. So could be anywhere today if it's going to rally. Another successful Monday for me, scalping gold. Love my gold. Good man. You keep doing it. If you find an instrument that you click with, stay clicked. Right, ADRs, Aussie dollar Swiss is the first one today. Sorry, RSIs. So that's H4 RSI extension. So we've just come off this monthly low. We looked at this one this morning. This is where the previous month started. It's not really a decent support resistance. 150 ADR is where I'd be watching today, anywhere around kind of 125 to 150 ADR. So we have just got the reversal on the Aussie Swiss. It could well just go from here, but it's very close to that level. So 4-hour RSI extension. I'd much rather see it down here and take it from sort of down here somewhere, and then look for a push back up into there. So it's not extending on the hourly. It's not for me at the moment. I'd much rather wait a little bit longer on this one, but it is extended on the 4-hour. The Aussie yen, as we know, is extended. Same rule with these RSI extensions. They are extended. However, you are buying a steam train at the minute that is going nowhere but down based on all this yen strength. So just be a little careful. All these yens, though, obviously, if they do pull back much further, we're looking at potential previous resistance levels for where we're going to bounce out of. That's the propulsion gap that started the rally. So this is where, if they're going to add, we would expect them to add, because that's the low, that's the high. If we're going to put in a higher low, it's got to be somewhere above that level, obviously, and that's where they started that move. So we hit it, we hit it, we hit it, got stuck, broke. So if you want to take this RSI extension long, if it doesn't work out, you'll be looking at adding in down to there and then get out, because that won't have had a profit take on it, and you'll be able to get out very quickly and easily when we get a ping back. Bear in mind, obviously, the US dollar CPI is this week on Thursday. Wednesday. So that's really when we're going to see the first signs of massive weakness in the yen if we get that big move on the US dollar. So S&P is still holding the highs there. So yeah, basically, just be a little careful with these yens. Just be prepared. You know, when you're getting into any position, the first thing you should be doing is saying, right, I'm going to get a reversal alert. I'm going to take an initial entry. Where is it going? So if this is right, excellent. Where am I going to put my TP? If I'm wrong, how am I going to scale into it? If you've got the market reversal alert CA, that's automatically going to get you in and scale in for you and do everything for you. But if you're trading it manually, you need to look at where obvious levels of support resistance are going to be. Yeah, and look at adding positions in there. So one there, one there, one there. If it's got all the way down there by the time, without stopping basically and pulling back, RSI is going to be massively extended. You'll get a nice big ping back on that one. So that's nicely extended. Aussie dollar yen, only just though. When I say nicely extended, it's extended on the 4-hour. I'd be looking for a minimum 25 and 75 extensions on the hourly RSI. So it's not quite there yet for me to get in. CAD yen is extended on the 4-hour. So nice big pullback there. Pulling back into that previous weekly level and rejecting. So again, same thing with the CAD yen. It is extended on the 4-hour. Your entry would have been there long. Obviously, I was still getting out of shorts, so I didn't go long, but that would have been your long entry. You had a little bit of a push, and now it's pushing back down again. And again, you've got loads of room on this CAD yen. Wednesday is when we're going to find out the news for the Canadian dollar. So you've got level there of resistance, turn support. You've got a level there of resistance, turn support. So this zone, I'd be looking for some kind of bounce out of there. If it doesn't go from here, somewhere down there, I'll be looking for a bounce, probably on Wednesday. Okay, Dow is starting to stall at 125 ADR. S&P is also stalling a little bit. So that's CAD yen. We've got Euro odd extended on the 4 hour to the upside. Again, this is a long. I'd be much more interested in long in the Euro, especially against the Australian dollar with the weakness that we've had. But that is extended. You also got an ADR hit on that one. Only just got extended. Not great. That's the better entry, the one that we had from there to there. So it's just extended. Same with the CAD yen, but it's only just extended. And the pound odd. So the pound odd and the Euro odd pretty much the same. Obviously, I've already got shorts on this one from the previous RSI extension. I've got an entry on from here somewhere. What was that? All the way back there, look. So that was the first entry. That was a couple of weeks ago. Gone nowhere on this. So that was my first entry, looking for a pullback down into propulsion. Haven't had it yet. Gone nowhere for around about 2 weeks. We've just pushed up outside of those highs, rejected. We've just rejected that high. So second entry's on. Not going anywhere. So stuck on that one. Same as the Euro odd. Stuck at the minute. So that's the same entry. Oh, no, sorry, there's the first entry. So Euro odd, you can see that would have been the first entry. That's the second entry. So virtually the same as the pound odd. You're going to get very, very similar movement on both of those pairs. Nothing exciting there. Hourlies, we've got the Euro pound extended to the upside. 5-minute reversal alert has just gone in off of ADR. So there's your reversal alert, and retest has just gone in as well. That's extended on the hourly. Only just, didn't quite get to the 75 level, didn't quite get me in, but it's above the 70 if you wanted to take it. So pretty much the same trade as that. Pound yen, same thing. Just got out of that one. That is starting to pull back now. So I'm glad I took that Swiss yen extra profit. So we are starting to see a little bit of a pullback. That wasn't a bad exit, actually, considering what's going on now. So again, you can take that one. Obviously, it's extended on the hourly. Not quite below the 25. It's just about at the 70, at the 30 level. So it's not quite extended enough for me to get into it just yet. Same with the New Zealand dollar yen, just about extended. If this could push down a little bit more and take that low, I'd be interested in potentially getting into a long on it. So lovely support area coming up. Yeah, previous resistance. So watch that area for a bounce somewhere up into one of these propulsion gaps. We are bullish. However, New Zealand dollar will get dragged down with the Aussie. The Aussie's collapsing at the moment, so could go either way, that one, but happy to take longs on it down there, but just be aware of this thing. If we get weakness in the US dollar as well, that yen's going to power up a little bit more. So just be prepared if you're going to get into any yen longs that you might be stuck in them. They might all play out within 24, 48 hours, but they might also push a little bit. So we'll see. There you go. So there's your RSIs and your ADRs covered. I might actually get second TP on the Dow today. Just watching this Dow out the corner of my eye looking for a mean reversion opportunity, but I can't see a level. Apart from there. Why haven't you ever done any podcasts? No one's asked me. No one's asked me. Somebody did ask me, somebody that was starting up a podcast, and I was kind of going to be the first person on the podcast. But they've got no viewers. So takes a lot of time and energy to do something like that. And point. Never been asked. Same reason I haven't been on TV. No one's ever asked me. Not that I want to. This is a face for radio. Yeah, just never been asked. Right. that's all I've got for you from an analysis perspective today from setup. So there's quite a few ADR reversal opportunities. If you take the yens out of the equation, those are all the ones that are really extended. So everything else is just about getting extended, just about ADR. And that's mainly euro, pound-based stuff. So Aussie dollar CAD is your most extended thing so far today. And that's obviously played out very nicely. So just a very difficult entry on that one today. You may have, depending on your broker, that little hammer there may have been a bull candle, in which case you may have got a reversal alert down there, depending on your broker. But inside bar is going in on the Dow. Got 2 minutes left on this candle, but we are pausing at 125 ADR. So potential short play. Back down to test that area. Anybody got any other pairs they want to look at? Brian, you haven't mentioned Euro US dollar today. I can see why. Terrible. So break to the downside, stop out, flip long, stop out, flip short, stop out, flip long. Yeah. Rotation day today on the Euro US dollar. GU didn't take it. Good man. Didn't take it. You can't get stopped out. Always a good play. Dow inside bar is just about to close. About 30 seconds. It's hard. It's very hard to buy that, but looking bullish, isn't it? However, it's a nice inside bar mean reversion trade, taking a short break there. Obviously, you are taking a trade against the huge amount of buyers that we have in the market today. So that, if we got 150 ADR today, that would be a pretty nice short. If you put a quarter of an ADR to a half an ADR stop loss on that today. So if you got in here, wait for some signs of reversal, wait for an inside bar, wait for some kind of bear candle or formation to sort itself out at 150 ADR. That's Friday's high, that blue dotted line. So if you put a quarter of an ADR stop on it, you'd only need half an ADR pullback to get 2 to 1R on that. Give it a bit of room to move. Certainly stalling out. Might have a go on that. Sell pending order just under that low. I think if this rolls over, they'll start taking profit on this move and we'll get quite a quick flush. Probably just down into this area here. US dollar yen, 150 ADR. I will look at the pound US dollar. Still coming down. Look. So, remember I got out of my long this morning? Yeah, I put a break-even stop on it. Didn't like it. Didn't like that. That was a textbook market structure bounce. Look. Glad I got out of that. Right, so pound US dollar. We're stuck at the moment in the middle with the pound US dollar. We're not going anywhere. So last entry was there on Friday. I didn't take it. Didn't get it on. Not quite sure why I didn't get that on Friday, but I didn't. It's probably a little bit late in the day and didn't get the reversal alert on it on Friday. Yeah, there wasn't one. So your reversal alert on Friday would have been there. I'm not taking trades in that hour at the the moment, just because some of the spreads I'm getting on Robo at the swap are huge. So I didn't get that entry on because the actual reversal alert would have happened very, very close to Friday's close. But obviously it would have played out. So, yeah, that's a nice double top bounce at the moment. But pound is bullish. US dollar at the moment, we don't know. Wednesday, we're going to find out on CPI figures whether it's going to be bullish or bearish. We don't know at the moment which way, but obviously the pound US dollar is along at the moment. So we're in a nice uptrend. But we have just hit a double top. So right now, no clue. Could go either way. If we pull back down into this area, which is a lovely support, which will be the 24 bounce, that would be a nice little long, I think. But whatever you do on this, it's going to be affected on Wednesday. So you're taking a trade basically ahead of some major inflation news, which we have no clue what's going to happen with the inflation. We are expecting it to come down. If that goes up, though, it's going to be interesting. We might remember the problem we have at the moment with positive news on the US. Positive news makes the US do that. Negative news makes it do that. If we get a negative CPI hit on Wednesday, we're going to see a big, big drop, which means pound US dollar is going to fly through the highs. So quite happy not being in it at the moment. Dow's just testing the lows of that previous inside bar. Might be a good short. I got 50 seconds left on this candle. So we are forming basically an inside bar on an inside bar. So this is a symmetrical triangle contraction on lower time frames, i.e. M1 in this case. So market basically just contracting. Can't keep contracting forever because otherwise it would be flatlined. So we will get a break in a minute, one way or the other. So break of that high or a break of that low. And bear in mind we're 125 ADR. So it's going to struggle to find anybody else willing to sell up here. Buyers are going to struggle to find people on side. US dollar Swiss. So US dollar Swiss got a long on at the moment. Got this low, which is last month's low. So 150, 175 ADR to the downside. So not extended. It got a little bit extended on Friday, not massively. On the 4 hour hourly, we got that extension on the Friday. So that's my entry, the hourly. That was an ADR hit and RSI on the hourly. So M1, H1, M5 mean reversion entry that was. Friday. Where's the entry? That's the entry on that candle there. So it's a reversal alert. That was your low. So your reversal alert would have been on that candle there. And obviously that was right towards the end. That was just before that cut-off period I've got. We just got into that long. This is the danger of taking trades really late on the day on Friday, obviously. You're entering right at the end of the week when the market's just all sold off. So just gone nowhere today. But yeah, long at the minute on US dollar Swiss. But obviously this will all change on Friday. So we're waiting for news as to whether the euro is going to power up. We've got 2 expected interest rate rises coming on the euro, which will power up the Swiss franc, i.e. US dollar Swiss down. what happens on Wednesday with the interest rates, the inflation figures for the US dollar will determine whether that becomes bullish or bearish over the next few weeks. So waiting. So I think probably what we'll find is that sort of movement until Wednesday. Quite a lot of movement today, more than I was expecting. But yeah, long at the moment. Obviously, entry there. If it drops down to there, 1 or 2 positions, and then wait for that pullback. Dow is thinking about going short. We've lost all volume. Okay, short entry there. Depending on the inside bar, if you're taking inside bar breaks, some people take the actual inside bar high-low. Some people take the previous inside bar, or the inside bar, the candle that the inside bar is of, break. In this case, you've got an inside bar inside an inside bar, so you could take that one. Entirely up to you. That's aggressive. That's slightly less aggressive. That's the non-aggressive entry. I've got a pending order under that low. So we will see. Can you have another look on oil? I can. Really hot in here today for some reason. So just double topping, or trying to double top on Friday's high. And they've sold that off. Short on the Dow. So yeah, oil basically, we bought this low week before last, and I got out up here somewhere. We were looking at that high being challenged, and then obviously that high, and now we're looking at that high. So it's impossible to tell, obviously, with oil at the moment. We are just in a range, and we have been in a range since kind of the end of April. So that final flurry we had down at the end of April, we've gone absolutely nowhere since then. We are up at the highs. So technically, it's range bound short. But the market has said very little recently about whether or not to they have a target on oil. So the beginning of the year, we were targeting 107. Towards the end of last year, we're targeting 107. They reduced that forecast down to $95 a barrel by the end of this year. Since we've got down to here, we've heard nothing. So there's no forecasts been re-released on oil by any of the big institutions. So it's impossible to tell, but they are looking for this to rally. So we've been looking for buy opportunities all the time down here, which we've been taking, and they've been working. So the danger with taking a short, obviously, is it looks like it wants to bounce. It certainly doesn't want to go below that level, does it? So there's only so many times you can test a level before it actually goes, yep, that was the bottom. So if you're trying to trade it back down to that bottom again, you know, we've tested it multiple times now. So it feels like you want to be long on it. Just look at this Dow. I close that long out. I don't like this Dow. Short. I might be wrong, but I'm just going to take that off the table, basically there. It's not really moving anywhere. We've completely lost all liquidity in the Dow. So that's the only reason I've just taken that short off. I've just taken a tiny little profit on it. What I was looking for on that inside bar break was a big move to follow through. We haven't got it. It's not going anywhere, which tells me there's not actually any interest in selling. Otherwise, we would have flushed. We haven't. So it's not moving anywhere, is it? So I'm not going to take that short. I also haven't really got a lot of faith in going long up here, so I'm done with it now. Yeah, so oil, I don't know. I really like the look of that as a double top short. So we've just had a reversal alert on that. Literally just had it. It's perfect for a short right there. Market structure shifted back to the downside. We've just taken out that liquidity. We've just stopped short of taking out that high. Sellers have stepped in. They stepped in there and drove it down. They've stepped back in and driven it down again. So it looks like a beautiful short. I'm just not convinced this is going to stay in a range. You can't stay in a range for such a long time, especially on a commodity like oil. It's just unusual. But then again, everything's unusual at the moment, isn't it? So if you want to take it short, I would make sure you've got a stop on it, because if it does break that high, I don't think it's going to stop. I think we will challenge all the highs we have been looking at as targets previously over and over again, and it will just be like pushing like that. But it's not the sort of trade I want to take. I want to take mean reversions. So I like it as a short, but I'm not sure if it is actually going to come back down here. I don't think it's going to get all the way back down. So you could take a pullback on it. But if you look at the move that we've just had on oil, it's very orderly. Yeah, we pushed up. There's lots of push and pull in this. Yeah, it's been very, very orderly on the way. When I mean orderly, I mean the buyers have been exiting, buying, exiting, buying, exiting, buying, exiting. Constant trading. There's no massive propulsion gaps gone in. Yeah, there's no huge moves where you'd think that's going to come back and test that level. It's been very orderly. It could just carry on doing that over and over and over again for days and days and days. But knowing oil, it will suddenly just go. That's what it does, isn't it? It's what we've seen, which is why it's not conducive for position trading. It looks like it's just doing a lovely little orderly climb and then bang, bang. We're down there, literally undone the entire thing. It took 7-8 days to do that. Bang, 2 days, done. But if you want to short it, I mean, look at the risk reward on it. It's huge. If you're getting on that reverse alert on M5 right now, that's 10R. You're going to have to hold it. But yeah, huge risk reward. It's got as much chance as anything, isn't it? It's going to break long or it's going to break short. If it breaks short, happy days. If it breaks long, you stop out. Complete V on the NASDAQ, 5 minute. Brought up the lows. That's why I got out down there. I just, you know, at the minute, it's somebody posted in the Telegram group about they've just done a load of back testing on the opening range breakout strategy. And they've done year after year after year back testing basically for 10 odd years and not got very good results. And, you know, you have to look at the ADRs when you're looking at these things, or rather the ATR of the pair, of the instrument that you're trading, because ATR has such a lot to do with whether or not lower time frame strategies work or don't work. And with the indices, it's debatable that we are now entering back into a bull calm market. And in a bull calm market, you'll experience half the ADR or the ATR that you will in a bear volatile market, which is what we are potentially now coming out of. We're entering back into bull calm. So when your ATRs drop, what tends to happen is when you get the open, you get those fast moves at the open. And then after that, it doesn't go very far for the rest of the day because the volatility is all done. So when you have low volatility, the open still gets the lion's share of the volatility, but you don't get as many of those massive rallies. So I get the feeling that, you know, when you're doing these back tests, obviously you've got to take into account ATR and how much potential movement there is on an instrument. The difficulty with the ADR, or rather the opening range breakout strategy specifically, is if you're using the opening range as your stop loss and you're calculating your TP from that level, if you have a big opening range, your stop loss becomes so far away, or your take profit rather becomes so far away as a percentage of your stop loss that the market just doesn't have the volatility to get to it. So in those cases, there'll be certain time frames or certain opening range breakout strategies that will work better than others. So the 5-minute opening range breakout probably won't be as good in a low ATR environment, but the pre-market 5 or 15 will probably be much more effective because you'll be trading a smaller range with a smaller stop loss, and the chances of hitting it will be higher because it's got more room to move. So taking profit quick when you've got it, when you've got these kind of scenarios where we get these big strong moves and then undone and gone, is what you need to be doing. But you've got to adapt to this. This is the trouble. There is no set file that works 100%. They all work, but you're going to have to sit through some horrible phases. And I think half of the problem is trying to identify what type of break you should be taking, which is what this version of the EA is trying to achieve, analyzing the ranges and saying, right, well, typically this one doesn't work as well, so we'll try that one. If that one is too big, we won't bother today. Using a bit of common sense, if you like. But yeah, difficult. Big V shape there. But as you can see, I closed this out manually. The EA, right? And this is the difference between backtesting and trading. Backtesting told me that a 2R is the best thing to do if you're taking the pre-market 15, which is what in this case we've taken today. The long didn't work out. The short was beautiful. The 2R gives us guaranteed profit for the day. Price action and the level that I can see on the chart tells me that there's a good chance of a double bottom bounce, which is why I closed it out early and only made something like a 1.4 today. Was I right? Yes, because I'm a human being and a trader, and I've seen these things unfolding before. The EA can't make that decision. All EAs you really do need to be watching. I was wrong to get out of this short. Look. I was right to get out of the long, but the short break there has actually moved down to not a bad one and a bit R so far. All Norse. Waited to hit the reverse button, but didn't. Wanted to hit the reverse button, but didn't. Yeah. It's obvious, this is where hindsight trading comes in. And this is why everybody that teaches you courses based on certain things, hindsight is amazing. You can show perfect examples of a hammer reversal and a V-shaped recovery like this. But hitting the button there and not hitting the button there or there, and putting a stop there, that's what makes you money or doesn't make you money. The chances are when you hit that button there, 50%. It's like 30, but it's not, it's 50. Yeah, so you just got to take it. Get in, hope it goes your way. When it does, get out with the profit. Should have taken it. Shouldn't have closed my short. So that's the trade I just took. Yeah, 1.5 hour return. I bottled it there. Didn't look good. That candle didn't look good when I closed it. When the candle actually closed, it looked very, very good. But I closed it mid-candle. So 2R coming up on that short. Anybody still in it? Did anybody listen to me? I didn't listen to myself. But if you listen to me, well done. So if you're going to buy it again today, watch this propulsion gap for buyers. Needs an OAP ORB for Ninja Trader. No, you don't. Just trade it in this. Jane just got out. Good job. 1.5 R is yours. I think you'll find with the ORB strategy in futures, you'll be wild swings on your P&L. Anything that gets any of those range-bound days in futures are going to cost you a lot of money. Don't forget you've got limited contract sizes you can take. So sometimes in futures, what you would need to do is definitely measure that, because a lot of the times you would need a filter if you used ORB in futures for the size of the range. Because some of the opening ranges, basically, you're going to find if you want to go stops opposite side of range or flip the opposite direction, opposite side of range, that's going to be a big amount of money. So you'd either have to filter it by have a fixed point stop on it, like 40-point stop or something on the DAX, or you'd have to say don't take them. Which Apex supported MT4? No one supports futures. MT5, that's what MT5 is for, futures. That's why nobody uses it, because there's so much better software out there. Futures isn't about candlesticks. Futures is about ladders. Ladders and order flow. Because you've got that data, why not use it? That's the thing. You can see where the orders are. That's the thing that you need to use in futures, not candlesticks. Although the same principles apply. Supply and demand momentum. If something breaks long, go long. If it breaks short, go short. Go where the money is. For any of you that are in Trader Tom's Telegram group, he posted out a video this morning, a YouTube video called, I can't remember the name of it. What's it called? Flawed. Which is, if you haven't watched it, Flawed, it's a fantastic documentary on the pits in the CME, in the Chicago Mercantile Exchange. And it basically tells the story of the transition from pit trading to electronic trading, and how all the traders that used to work in the pits are all basically lost because they don't know how to use computers. But the principles of trading here are the same as in the pits, and it's to do with volume. It's why tick strike exists on here. It's to do with this noise that you hear, what they used to call open outcry, which is basically that order flow. So it's listening to the market, listening to the order flow, and going with where the market goes. And this is designed to simulate the outcry that you would hear in the pits. So high ticks are people buying, low ticks are people selling. Buying. You buy it because everyone's buying it. If everyone's buying it, it's going to go up. When people stop buying it, it's going to stop. And if people then start selling it, it's going to go down. So when you hear people selling it, you sell it. Momentum breakout. And exactly the same, the ORB strategy. The ORB strategy takes a range, and if people start buying it, you buy it. If people start selling it, you sell it. You've got absolutely no idea whether the open outcry is going to be buys or sells. And that hasn't changed. The pits were exactly the same as electronic. Electronic now, computers are just buying it rather than people shouting buy, and you hearing buy being shouted. You now hear ticks going long. Same principle. But it's interesting watching. I was watching it again this morning. I got dragged into it. I've seen it before. I've seen it a couple of times before, but it's a fantastic documentary, and it really shows you how the market works. And there's multiple times in there where they preach exactly what I preach in here every single day. You went into those pits every day and you had absolutely no idea what you were going to buy. You had no idea which direction it was going to go, and didn't know how much you were going to buy of it. What you did was what everybody else did. The guy over there was buying a load of that stuff, and that guy over there was buying a load of that stuff. You bought a load of that stuff. And if it went up by 0.5 cent, you sold it to whoever would buy it from you. That's how you make money. It's not about, is Apple's share price going to be good this week? It's these guys are buying it, I'm going to buy it. That's literally exactly the same here. The odds when you press a button are 50-50. You press the buy button, the odds are it'll either go up or it will tick down. Out of your control. When you press the buy button, the guy next to you presses the buy button, that guy that side presses the buy button, all three of you are going to press the sell button and make money. When you press the buy button, those two guys press the sell button, you're going to lose. There's no system, strategy, candlestick analysis method on the planet that can tell you where this thing is going. So you just get in and you get out and you make a positive reward. That's it. And that's exactly what it tells you. I'll give you the video. I'll give you the link. Be warned, there's about 1 billion adverts in it. Literally 1 billion adverts in it. Yeah, go and watch it at some point. But you see these guys made millions, absolutely millions, and some of them made absolutely nothing. But none of them knew what they were doing. Most of them were out of college, out of university, had no degrees. They left school basically, and a mate of theirs got them a job in the pit and basically said, they're selling at the moment. Listen, you can hear it. They're selling. Selling. Sell it. That's it. That's all you did. You just waved a card in the air and went, sell, sell. I want to sell it at this price. I want to sell it at this price. And as soon as that person took that order, you were like, I'm short. And you're looking, scanning, watching people's faces for somebody else on the other end that's going to go, I'm going to buy it in a minute. And as soon as he goes, I want to buy it, you go, yeah, here, you can have it. Whatever that was and that's what you made. Simple. That's literally all that happens. That's the ORB strategy. I have no clue this morning that was going to do that this afternoon. So as they did that, I did that. I got out. That's it. Nothing clever, is it? It's just momentum strategy. However, you have got support and resistance levels. And again, all they did in the pits was, and you see some of the charts they used, yeah? They use, there's nothing complex on their charts. Yeah, most of their charts have got lines drawn on them like that, because when it gets to that level, that's where, you remember on Friday, Bob, we sold it up there. Yeah, it says, well, if it gets up to there again, I want to sell some more. All right, Bob's selling some more there. Frank hears Bob selling it. Frank starts selling it. Everybody else starts selling it. What does it do? It comes down. Why? Because everyone's selling it. Nothing complicated, nothing clever. Supply and demand. So easy, yet so complex, because there is no way of predicting it. Your job is risk reward, and that's it. Simple. Jane, I find the pivots monthly, weekly, and daily pretty good for targets and support resistance. Yeah, again, they're a self-fulfilling prophecy. Some of those on that video, some of those you will see on there, you will see some indicators, and you'll be able to tell they are pivot levels, pivot points. The problem now is the vast majority of this is algorithmic. And this is why we see so much movement now within intraday candles, because the computers are just running it up and down the ladder. And then they will stop running it. They'll stop hitting the bid, and the ask will take over. And then they'll get down to a level, and then the bid will kick in again. And you get movement like that. And then you get that. It's trying to catch these is how you make the money. The momentum moves pretty quick from accumulations like that. So from there down to there, that's where you need to get out. You've got to be that quick on a lot of these light illiquid markets. But pivots will work very well, but then they won't work very well. I used to trade pivots. I used to trade a strategy by a guy called David in Forex Factory, and he had a fantastic pivot-based strategy. And he used to position trade it as well, very similar to what I do, but intraday. The problem with intraday position trading is you quite often get a lot of size on very, very quickly. And if you get into a multi-day squeeze, you're dead. And he died a lot. So it didn't work. But you'll find a lot of those pivots will work some days, other days they won't. Why? Because momentum. If they're buying it, they're buying it, and they're buying it. Just because there's a line on the chart means nothing. The guys that have got limit orders sitting at that pivot point will just get run over. Splat. Yeah. There are more buyers today than sellers. Therefore, you get run over. If that's a pivot point, it failed. There's nothing you can do about it. But some days you'll hit those pivots. It's the same as ADR, isn't it? Look at the ADRs today. Same principle applies. You know, people message me all the time about the ADR indicator. Oh, it hit ADR today, it didn't turn around. Sorry, were you expecting it to be the miracle cure? No, it didn't turn around today. But some days it will hit to the pip. Not so much to the pip, but very, very close to it. So look at Aussie US today. ADR. Look at that. Two tails at ADR, 100% long. People trading the 1 minute chart are thinking the ADR indicator is the holy grail at the moment until it got invalidated. But everybody that took that reversal out on M5 at ADR today is thinking this is the holy grail. It is today. Tomorrow, it will get completely run over and do 175% of ADR. But then everybody that trades 150 ADR reversals only will be thinking this is the best thing since sliced bread until they all get run over by a 225 ADR day where the whole thing lights up red. We've had them, haven't we? But they're all caused by fundamentals and news. So on a typical day, ADR works beautifully when there's no news because the market, it's measuring market exhaustion, mean reversion. Yeah, the guys in the pits have been selling and selling and selling and selling and selling and selling. Yeah, these guys in the pits have got to take profit. Yeah, they've been hitting that sell all the time. They've got a load of money. They need to find people to buy, or rather now the algorithms do. Same principles, supply and demand, buys and sells. Watch it. It's a real eye-opener. For any of you that are looking for the holy grail, that's that grail, that system, that strategy, that way of trading that increases your odds. Go and have a look. Everything you use with a stop loss will get run over, regardless, at some point. Remove the stop loss and just buy it when those guys have been selling it hard. You know what they're going to do next. The banks have taken over from the pits, basically. Brian, I combine both. I scream at my PC while trading. Perfect. They're buying it now. I can tell you. I'm not even looking at it, right? And I can tell you right now the S&P is going up. I'm not even looking at the chart, but I can tell you there's a big bull candle on the S&P now. Because I just heard it. I heard them buying it. Open outcry. Buy, buy, buy. They were buying it. I heard them. Yeah. Everyone's going to go out and buy Tick Strike now. Fantastic bit of kit. If you trade futures, Tick Strike is phenomenal. What did you say the documentary name was? Oh, I've just posted the link. It's called Flawed. I never remember the name of it. I was looking for it a few weeks ago. And I could not, for the life of me, remember the name of it. I'm glad Tom posted it because it's a really good one. Go and watch it. Never had any luck with pivots. No, I didn't either. They all seem to blast straight through. The trouble with pivots is that all they are mathematical calculations. In the same way as ADR is a mathematical calculation, Fibonacci is a mathematical calculation. Support resistance is not a mathematical calculation. Support resistance is a level where price has turned in the past. We know for a fact that is where a bull run ended and sellers stepped in and took control of the market. So we know that these are levels where the orders have been and will be sitting again. Pivot levels are mathematical calculations based on previous price movements. As I've said in here many times before, what's happened in the past has got absolutely nothing to do with what's going to happen in the future. What happened on that candle has got no bearing on the next candle. Yeah. So if they bought the crap out of it on that candle, as you can see there, they sold the crap out of it for 3 hours afterwards. Yeah. That bull candle does not mean it's going up. That bull candle means it's gone up. Nothing to do with the next hour. Yeah. It sold off for 3 hours. Excellent. What's it going to do for the next 3 hours? No idea. But in this case, it went up. But it didn't go up because that went down. It went up because more buyers entered the market at that point than sellers. That's why it pushed up. So all you got to do is identify ways of preempting momentum, support, resistance, market structure reversals. Yeah. This is why I built the reversal alert indicator so that we could see when the buyers have taken control. We can see when the sellers have taken control. Do you want to be selling when the sellers are in control or buying when the sellers are in control? Selling, obviously. You want to be buying when the buyers are buying. Yeah. You just got to identify ways of identifying who's in charge. Yeah, you'll see some of the people in there. Some of the guys in there came out of the pits and were livid, absolutely livid with computers taking over because they didn't understand them. They understood pieces of paper and they understood how to read faces and know whether that face was going to buy it or sell it next. They can't understand what happens in computers. They're all livid. Things moved on. They're selling at the moment. Fear and greed. We're still in greed land. Gold. Someone's just asked for. We've looked at that this morning. We're stuck. So gold, basically, you will find out on Wednesday when we get the CPI figures for the US dollar. Until then, it's not going to go anywhere. We're waiting for the US CPI figures. Unless something obviously changes between now and then, but it's Wednesday for gold. Up or down? Not much use, am I, really? That's going to happen. I can guarantee you that. Guarantee you that's going to happen. I can't guarantee you which one. You're stuck in the middle of nowhere at the minute. Look, there's your highs, there's your lows. That's where you are. The odds of it going to one of those is 50-50. Pick one, stick a stop, stick a TP. If your TP is bigger than your stop, you make money. Simple. But right now it's not extended. So I've been watching this gold and looking at, because I don't trade it because I've been stung by gold so many times in positions in the past. I was looking at this at the weekend and it's actually, for the last few months, I would say, it's kind of been a position trader's dream. I just haven't been trading it, but it's really been respecting the RSI very nicely over the last few months. You know, the extensions are easily buyable. Yeah. But you can guarantee that if I was to enter on the next RSI extension, we'd get a massive squeeze on a US dollar move. So I'm not doing it. Selling the S&P again. Martin, you are the Mystic Mega Forex. If only. No, all I've done, Martin, is I've identified that there is no way to be Mystic Meg. So therefore, geez, hear that? Somebody on a lawnmower motorbike. Yeah, so just hit the button, whichever way you fancy it, and then just get out when the market is in positive territory. Because if I was Mystic Meg, I would be sitting on a beach drinking Mai Tais. Wouldn't that be nice? But yeah, just take RSI extensions. That's all you need, RSI extensions. You know when the market's been rallied, so therefore you know when the profit takes are possibly going to happen. Toss a coin, exactly. There's another guy in that video as well. I think it's fairly far on in the video, but he basically tells you exactly that. There was a guy, it's towards the end actually, they're talking about cigars. There you go, that's what the CME looks like now. They're talking about cigars basically, and how they used to go into these shops to buy cigars. And there was one guy that used to go into the shop and they used to play this game, flip a coin, basically, to see whether or not somebody would get a cigar or whatever it was. But basically they were just saying that's what they used to do. You could literally walk onto the pit floor in the morning and go, buy. And you would make money in that way, in exactly the same way as you would anything else, because the odds, as soon as you hit that buy or that sell button, or you took that buy or that bid or ask order, the odds were the same. 50-50. Except these guys would be selling it in seconds, buying and selling it in seconds. Yeah. This is how they trade now, look. Yeah. No charts. Use the ladder. You watch the order flow. You see where the orders are in the market and you take the orders. What's the point in looking at a candlestick if all a candlestick tells you is what's happened in the past? You need to look at where the orders are sitting now and decide whether or not you think the guys down here have got enough orders on side to push it up to these guys. If that's the case, you get on board with those guys. You pick a side, bid or ask. That's it. Right. I think that's it for the day. We're not going to get a lot of movement this afternoon. So tomorrow we've got nothing much either. We've got the NAB business confidence report coming out from the Aussies tomorrow, which doesn't really do a lot. Tomorrow morning before I come on, we've got the claimant counts. So this is very hit and miss. It needs to be a big number for this to actually have an impact. So if it's out by sort of 20,000 plus, you might find we get a bit of a push or a pull on the pound. Most of the time, though, as you can see, it's kind of within 5-10K tolerance. So we don't tend to get a lot of movement off of it. It's kind of to do with unemployment rates, but it's not. Claimant count is basically kind of people that haven't got jobs, if you like. But it doesn't tell you, it's nothing to do with actively looking for a job sort of thing. So it doesn't tell you the actual unemployment rates or anything. So it can be hit and miss. Sometimes it does, sometimes it doesn't move. So just be aware of that tomorrow morning. We might find some big movement on the pound pre-market. Other than that, there's no other news tomorrow either. So today was a no news day. Tomorrow is a no news day. So any movements we get today could well be undone tomorrow if they haven't already. And any moves we get tomorrow could well be undone before Wednesday. Wednesday is the big day. So that's where it's all going to kick off with the New Zealand dollar rates in the morning, the inflation figures in the afternoon, and then the Canadian rates after that. So this Wednesday, there's 3 major news events on 3 completely different instruments or currencies. So that's where it's all going to be happening. So until then, I would expect to see very much what we're seeing at the moment, which is a fair old bit of movement, potentially intraday. You get some ADRs maybe, but I wasn't expecting to see ADRs, to be honest. But I mean, likely they will all play out. And obviously this yen is still running. So the yen is one of the things that could just continue to go. So we'll see. Very difficult at the minute. Is it a good idea to wait for RSI extension and ADR hit before you place a trade? They're totally different strategies. So your RSI is a longer term movement. So if let's say, for example, price was sitting up at the 60 level, you could get an ADR hit. Well, this is a perfect example. There we go. Let's look at the Swiss yen. Perfect example today, look. So RSI is sitting at 35. ADR, we're 125. So the idea of ADR is it's a strong intraday push beyond the averages, which you would typically find you get a profit take move from. So for them to be able to reach strongly, they need to take profit. They reach, they take profit. They reach, they should take profit. Yeah, intraday. RSI extensions are sustained rallies. Yeah, so for the RSI to get extended, you need to have been pushing hard in one direction for a period of time. So this is a long move, if you like, by the banks. It's a sustained rally. After a sustained rally, typically we get a pullback. Yeah. So if you wait for ADR and RSI to hit, the danger is what you'll find is you get an RSI extension. For example, that was probably ADR as well. Let's have a look. So that one was. So ADR on this is 97. That was 215. So that one, you got an RSI extension on the day that you got an ADR hit. So that would have been a perfect example. Did that work? Well, if you took that and that and that, yes, it did. But it's one of those things, you can't wait for both of them to happen, because what you'll find is most of the time when you get an ADR hit, you will also have an RSI extension. Or when you get extended on RSI, the reason will be because there's been a strong push, which will also be an ADR. So you will miss a lot of RSI extensions. So that's probably going to be an RSI. Let's just check it. 138. So you got an RSI extension. You got an RSI extension there. That was also an ADR hit that day. But let's say, for example, the price had opened there and it pushed up to there and it got extended on RSI, but didn't hit ADR. You would have missed that trade. So it's not ideal, basically, to wait for both, but you can do. You can always backtest this, yeah? So if you use the market reverse alerts EA, you can backtest all of this. So you would literally go and set up ADR reversals. So you could use the ADR reversal set file. There you go, ADR hit. So that's an ADR set file. And then if you want to, you can also use higher time frame RSI. I would use the hourly as well. Selling hard. You can't hear it, can you? But they are selling very hard. My Mester's talking. Okay, so they're talking about increasing interest rates. So the markets will be coming down on that. Bullish US dollar. So yeah, so you can set it up to take both if you want to. Backtest it. You'll find that you'll get less entries than you will on the ADR set files alone and the RSI set files alone. But you might find that you get less drawdown and less positions taken on each one. But they're separate strategies. One is intraday, one is multi-day. So they do kind of work together, but I wouldn't necessarily take both at the same time. So I've just taken a short on the Dow. I've just break even stopped it. Yeah. But it doesn't matter, does it? Like I keep saying, how you get into a position is irrelevant. What is the important part is how you manage that position. Because when you get into a position, regardless of whether you've taken an RSI, an ADR, or a combination of both, what happens after that is what is going to make you the money. So just because you combine the two together doesn't mean it's going to come down. It means you've taken an entry. You've still got to deal with that trade. So US dollar, I was just going to see if it's having a bit of a rally off the back of that news. Doesn't seem to be. In fact, it seems to be reacting negatively. It is. So yeah, negative reaction to that to that US dollar news. They're starting to buy it again now, the indexes. I just don't feel comfortable using the DOM. No, well, if you don't want to use the DOM, don't use the DOM. That's because you use candlesticks. The only reason to use the DOM is if you want to focus on order flow and all the important stuff about orders. If you just want to use candlesticks, it doesn't matter. If you want to use candlesticks, there's no point in trading futures, is there? You might as well trade CFDs. NV School, what's that? Thanks for the homework documentary. It's more interesting than educational. There's a lot of information in here about how stuff used to work in the past, basically, which is you won't learn anything that's going to help you in your trading, apart from the fact that this thing is completely random and you've got no way of predicting the future. these guys basically, this is what they look at, price levels. There's levels on the screen. Yesterday's high, yesterday's low. That's what they could see. Where was it yesterday at the highs? Where was it yesterday at the lows? How many points has it rallied today? How many points has it rallied yesterday? Those are the pieces of information you've got to go on. That's it. This guy's really clued up. He's really educational. But yeah, it's very interesting. Probably blow a lot of the myths away that you think about the markets, and hopefully hammer home what I teach, basically, which is there's no way to predict anything because you're trying to predict a random event. Look what I'm just on those indices. Then look. Let's look at the 1 minute chart. That's Mester saying what he just said. That's why that happened, because he opened his mouth. That's literally what happens. It's all driven by fear and greed and momentum. Yeah. They hear that interest rates going up will reduce the risk of future things happening, of more action in the future, i.e. more interest rates in the future. So that is saying the Fed are saying we are probably going to increase interest rates so we don't have to keep doing it later on. People will then react to that. The people that have seen the reaction will then act on that reaction, and you will get a move. That's what makes the market move. People executing orders based on what they are seeing in front of them. And in the old days, it used to be what you could see, who you could see, and what they were doing. Now it's what you can hear, what you can see on the screen, and what you see in front of you. That's all you have to go on. But, that means nothing to that. Yeah. So what this candle has done now has got nothing to do with what's going to happen in the next 5 minutes. I've got a short order on right now, which is $140 in profit on the Dow. I've got it at break even. I can't lose money on it. What am I going to make? What's the next candle going to be? Don't know. But what I do know is if it gets down to there, I'm going to make roughly $800. If it gets up to there, I'm going to make nothing. Those are the only two things I know. Which of them is going to happen? I have no clue. But I know that if I hold it down to there, that's my day done. And there's one guy actually in that documentary that says, I didn't know whether I was going to get in and at 8:05 be finished for the day, or be at 3:30, I'll still be sitting there going $20,000 down. He didn't have a clue. Some days he'd be done by 8:05. Take some pre-market action on the Globex and that would be it, done, before the bell opens. Other days he'd be there at 3:30, pulling his hair out because he just could not catch a break because he didn't know which way it was going. Heads or tails. That's literally it. Anyway, go watch it. I'll stop talking about it. I won't ruin it for you. Would you still consider buying the yen? No. I'm not. Personally, I'm not buying it because I've just got out of all my shorts. Look, I'm flat on the yen. I've got one long on Swiss. Yeah, sorry. So I've got Swiss yen on. I thought you meant buying it as in buying something against the yen. So I'm out of all of my yen apart from Swiss yen. So everything yen that was taken off of this mean reversion that we were waiting for, I'm out of. I do think there's probably more room for the downside. I think there's more strength to come through on this yen. But would I want to get into a short position here, XXX yen? Probably not. You've missed the boat. So if it pulls back, I would consider selling it there, maybe up here. Follow the trend line guys who are also going to be watching these levels. Yeah. So that maybe, but I wouldn't sell it here. I would sell it. You want to sell it when it's going up and buy it when it's coming down. But no, not at the moment. I've only got this one Swiss yen left. Everything else is flat. Yeah, ship sailed. This is why we use the RSI. Yeah, the RSI. I mean, these yens are a really bad example because obviously these are squeezes. But on a typical instrument, the RSI tells us when we are expecting the pullback. Yeah, so there's 4 trades on this chart now. One there, which took 3 entries to make. One there, which was 1 in, 1 out. One there, which was 1 in, 1 out. One there, which was 1 in, 1 out. Yeah, this is why we use the RSI. If the RSI is now extended to the downside on a normal condition, like with the CAD yen here, you don't want to be selling it. You want to be buying it because the market has moved down and they are ready. If they are ready, when they're ready, they will take profit. So we're identifying conditions when we can get in on their profit take moves. Yeah, there's a buy there. I got out of that buy, thankfully. You could have made profit on it. I just decided not to. I got out on the news. I got taken out on a what should have been a break even on that trade. Look, that was a break even at news. The news hit and they slipped me all the way down to there and made me a $60, $70 loss. But the reason I moved that to break even was because I didn't trust it. Because we've been waiting such a long time for an equidistant move to the downside. The bigger, the longer, the stronger the push, the bigger, the longer, the stronger the pull. We've had a massive move on this that started at the end of April that they haven't had a profit take move on. So I'm expecting that profit take to be substantial. So I don't really want to be buying it. If it gets down to here, maybe they're buying it up. I'm just going to get out of that position. So they're buying up the Dow. Big wick, inside bar, wick. I can hear a load of ticks coming in long there. It's good. I've got tick strike on, which is really handy. Wow. You know, that in futures is enough. That's $200 in futures. It's enough, isn't it? So yeah, I wouldn't buy it now just because it's not extended. My strategy is mean reversion. For a mean reversion, you have to have an extension. You can't get into a mean reversion trade without an extension in the market because you're trading the pullback. Yeah. So the mean reversion, there wasn't one there. That was a mean reversion. Yeah. That was a push, push, pull, push, push, pull. Yeah. It's the old sell high, buy low, basically. What you got taught on day one, you ignored because you're looking for the Holy Grail indicator, as we all were. Right, I will leave it there today. Anything you need, let me know. I'll be in Telegram. Have fun watching Flawed. They do swear a lot and they smoke a lot of cigars, just so you know. Yeah, and they drink a lot of alcohol, as you would expect. But yeah, I'll be back tomorrow. We'll trade the NASDAQ, etc. tomorrow afternoon. I'll be back for tomorrow morning for the Frankfurt session for the Dow. Obviously, just remember that if you've got any pound exposure on, you're going to be potentially affected tomorrow morning by pound movement. I've got shorts on the pound, so hopefully we get negative figures. Yeah, I'm not expecting a huge move in either direction. So anything that's moved today could quite easily get undone tomorrow as they just wait basically for Wednesday. So it's all about Wednesday this week. So anything we can grab before then is bunts. All right, so have a good day. Anything you need, come into Telegram. Otherwise, I'll be back on 7:50 tomorrow morning for Frankfurt and 2:20 for New York. All right, have a good one.